traders, Gary Wagner here, approximately 10 a.m. in Honolulu, 3 p.m. in New York City on Thursday, 23rd day of February 2012, and this is the daily report for gold and silver. To a 3-month high we go. We are currently trading up about $7-8. We've seen this market trade as high as $17.86. We are on an absolute tear in the gold market. And traders, then there's silver. Silver is trading up phenomenally, up about $1.25 to $1.30-35 higher, currently printing at $35.49. As you can see, it has hit our initial target, $35.35. We were talking about that just yesterday. I didn't think it would happen this quick, but we have a phenomenal move in the precious metals markets, both gold and silver today. Traders, one thing that has been evident in price activity over the last, say, 12 to 18 hours of trading is an increased volatility as we watch this market really trade up to new highs, come down $10, $12, really trade strongly. As you can see, currently trading at $17.78, and it is coming off of a most recent high. And that high, let's go right to our crosshair so we can get it exactly or as close as we can, is right around 1786, 1786.40. As you can see, our current print is 77, 76 in that area, and it is simply trading around a nice volatile range as it forms a base this morning on these 3-month highs. Now, we talked about the fact yesterday that for those traders really looking to reposition themselves into the market or to add to the existing positions for those that are still holding on to the 1580 and plus a couple of adds to go ahead. Yesterday we signaled it was time to add to both gold and silver. Hopefully you took that advice. You have some good distance in the market at this point, and as it's made a new high, you shouldn't be experiencing too much heat or negative action on the trade itself. What are we looking for? Well, I'm still looking at our target over 1800, 1810, that being our first target area that I think this market can achieve. And traders, we are currently looking at a 60-minute Japanese average or Henkin chart to show you the kind of activity that we've had and just how strong this market has been. When you consider on the 16th, this is that low right around 1705. And then from the 16th, the market moves in a succession of moves higher. We do get a correction here, but after that, we really get what I call the base forming. In other words, you get a nice rally, sideways trading activity, forms a base, another nice rally, sideways trading activity, it forms a base and support, again, to these new highs right in here. And once again, we had a little bit of sideways activity, and now we've experienced yet another rally taking us to new highs. So you can see that there has been a orderly progression of this market as it has been moving off of that tremendous support at 1700, moving on towards $1,800 per ounce. And not to be outdone by its big brother, silver is most definitely showing a sterling performance today. In fact, it's up almost 4% on the day. As you can see, 35.41 current print. That's putting it up well over $1.15 today. And as you can see, it has gone right to our first level that I felt we might see some resistance. Now, traders, I don't want to be unduly cautious, but at the same time, I certainly want to be cognizant and aware as this market trades to this point, because we are going to see one of two things happen. It will either A, barrel straight through, and if it does, my personal belief is that it really doesn't have any strong resistance till almost $38 per ounce, $37.83. If it does meet with some resistance, it will probably backtrack, and it could go back to maybe 33.5 to 61% level would be a logical spot for a small retracement to take place. So we'll have to see how the market wants to react, but I can tell you this. We have hit our first set of targets in silver. We still have a ways to go in gold. Expect an increased volatility in the market, an expanded range, and more upside in the days and also next week. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you on Friday for the weekly review. Bye-bye.